Start. Welcome to my weekend market recap, 4th September 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems that work as add-ons on the TradeStation and Metastock platforms. That was the last slide of the presentation. Let's continue with the live system, starting with a look at the global markets, starting with Australian Index AORD. After displaying the bearish headwind, when the backdrop color changed to bearish, price is remaining with the backdrop color bearish. The high of the bearish headwind candle has not been breached. In the last webinar, that was Wednesday's pre-market webinar, it was pretty much at the same level, and I mentioned that we would not short Australian index because it had trendline support in both weekly and daily, and those supports are holding. On Friday we have a bullish flow. However, the backdrop color is bearish in the weekly chart. That's why we are not going to apply the go with flow trend following long trade setup. It is continuing to be in an uptrend. If you are holding long positions in the Australia market, you may continue to hold them. Japanese index topics. If you remember my Wednesday's webinar, I mentioned that because of the breakout in the daily from watermark resistance, and right at that point it broke out of the trendline resistance in the weekly chart. Because of those two breakouts, I suggested buying in the Japanese market, and if you did that by Friday's close, you have a nice profit. It is continuing to be in an uptrend after breaking out of the sideways range on Wednesday. China's CSI 300 index. As of Wednesday's webinar, it was inside the range, and that is continuing. It has no clear direction. We will avoid taking directional trades in China market right now. FTSE index UK market. In Wednesday's webinar, it was moving sideways, and that is continuing. No change from Wednesday's webinar. And lastly, India's Nifty 50 index. It was in an uptrend, and that is continuing. It made a new all-time high on Friday. Very much bullish, the most bullish of all the global markets, and it is also overbought for many days, shown by the stretch band indicator, overbought for many weeks as well. If you are already into some long positions, you may continue to hold them. I will avoid taking new long position in India Nifty 50 right now because it is extended to the upside. That was a look at the global markets. What do we see? We see the exact same state as was true in the Wednesday's webinar. China and UK markets are moving sideways. Australia, Japan, and India are in an uptrend. What about the USA market? For that, let's use the TradeStation platform using Q Elite add-on. Looking at the market ETFs, S&P 500 ETF SPY first, very much bullish in an uptrend, made a new all-time high on Thursday. On that day, it also displayed the indecision at the top, and in the alternate signals, HSA-like signals, it displayed a red candle high. However, it is still in very much uptrend and there is no reversal trade setup. It is near the upper boundary. I will avoid taking new long position now, but the positions initiated at the swing low, those could be continued to be held. Bullish but extended. QQQ, it made a new all-time high, at least on the high of the day on Wednesday. Thursday it came down little bit. Wednesday in fact displayed the same signal that we saw in SPY, the indecision at the top. Thursday price came down little bit. Friday price opened lower, however closed higher. For the week it clearly made a new all-time high, stronger than S&P 500 shown by the weekly relative performance, straight going up. Here we don't see a red candle high in the recent days that we saw in SPY. Bullish, extended because it is close to the upper boundary. I'll avoid taking new long positions. Dia, not so bullish as SPY and QQQ. Why? Because it is not in an uptrend. It is inside a triangle pattern. So it's moving sideways for short-term trading purposes. Over longer term, it is of course in an uptrend. But for swing trading, we are looking in the pattern of the recent couple of days and weeks, and when we see triangles forming in the daily chart for swing trading purposes, we say it is in a range. In the last webinar, Wednesday's webinar, I showed that it was moving inside very narrow range until this day, and then Wednesday regular session, Thursday, Friday, that range bound move is continuing. Also, the backdrop color here is bearish magenta in the weekly chart. Those are all showing weaknesses, and the relative performance sharply tilting down is showing relatively it is severely underperforming the market. We see there is a red candle high in Dia also in this week. Lastly, small cap ETF IWM moving sideways for many months now. There was an indecision at the top on Thursday. Friday displayed the bear release signal with a doji-like candle. The week's candle also closed with a somewhat doji-like candle, indecision candle. And here also we see a red candle high. So 3 of the 4 market ETFs have displayed red candle high in this week. However, there is no bearishness, there is no short trade setup also, not even using the reversal trade setups that we have in Q systems. IWM and DIA are now moving sideways. SPY, QQQ are in clear uptrend that is showing clear divergence between different categories of stocks. The market is not as bullish as was in the previous week. Why? Because two of the four ETFs are now moving sideways. Last week, 3 out of 4 were in an uptrend. DIA was also in an uptrend. Still, there is no bearishness as far as the market ETFs are concerned. And if we look at the market internals, let's first look at the two exchanges, Nasdaq and NYSE, very broad calculation. And here we are looking at the internals. First, we look at the 50-day moving average calculation, percentage of stocks above 50-day MA. For Nasdaq, it is just below 50% level. For NYSE, it is just below 60% level. So NYSE is continuing to be stronger than Nasdaq as far as this indicator is concerned. Percentage of stocks above 50 MA, a breadth indicator. Both are in an uptrend now. There is no bearish divergence that was present couple of weeks ago, neither in terms of the percentage of stocks above 50 MA nor in terms of advanced decline up-down volume. There is no sign of weakness in this chart. Relatively, NYSE is stronger than Nasdaq as a whole. Now let's look at the mega cap top 20. Mega cap top 20 came down after displaying the bearish headwind, reached the yellow line, and that time it also had a trend line support. It probably breached the trend line support and immediately reversed. Then it came to the upper boundary level, displayed a doji candle. Next day, Thursday, it came down a bit, displaying the bear release signal. Friday closed with an indecision shape candle. Overall, it is in an uptrend, and we see from the relative performance line how mega cap top 20 sometimes is outperforming, sometimes it is underperforming. In this area, the relative performance line was tilting up, so it was outperforming the market until Wednesday. Thursday, Friday, it tilted down. Prior to that, in this area, it was underperforming, outperforming, underperforming, outperforming, underperforming, outperforming, underperforming, outperforming, underperforming. Now, if you look at these lines, it's a zigzag line, showing clearly that there is constant rotation in terms of which one is stronger, mega caps or regular stocks. And if we observe that when price came to the upper boundary and it was outperforming for a while, we would know that the time is coming for it to underperform. That would be another reason to book profit at the upper boundary. In any case, if we buy at the value area, in this case we could buy when the yellow direction line held. That would also be a pullback long trade setup. If we bought there, our usual practice is to close the trade at the upper boundary, by which time much more than risk distance was covered. In this case, another extra reason to close the position would be this constant moving in favor and out of favor between mega cap and regular stocks. There is no trade setup at the right edge for mega cap. Overall, it is in an uptrend. We have to say it is in an uptrend, though the rotation is there in terms of relative performance, which one is in favor, mega cap or non-mega cap. Overall, we have to say that it is also in a clear uptrend. Hardly ever came below the yellow direction line. So it is in a clear uptrend. From this angle also, mega cap chart also, there is no weakness. It's bullish. And if we look at the last part of the market breadth, US market breadth total view, that is calculated based on the two composites and four major indices together. Here also the yellow line, percentage of stocks above 50 MA. It is in an uptrend now at the right edge. Percentage is around 60% level. What category of stock is in favor? Growth versus value magenta line. I showed in the couple of webinars prior to today's webinar that the magenta line started to slope upward again. That is, the growth stocks were starting to outperform, and that is continuing into the Friday. If we look at the cyan line, small cap versus large cap, it was underperforming in this area. In the last webinar, I mentioned it was starting to outperform. That is continuing. So we may keep note of that if we find trade setups from different categories of stocks, we may favor those that are growth stocks and small cap stocks. When the market is at or near all-time high like it is now, I am looking for signs of reversal in terms of distribution count or Hindenburg. None of them are present. Therefore, I am continuing with the view that I am sharing in several webinars now, that I am not expecting the market to drop sharply and suddenly, because neither Hindenburg is there nor large distribution counts are there. The market breadth is also not showing any sign of weakness. So from every angle, whether we look at global markets, USA market ETFs, and market breadth, mega cap top 20, there is no weakness visible in the market. Is there any weakness from the sector, industry, stock, advanced decline breadth that we can find out from Q edge? This is 1 month to 1 day. Sector, industry, stock, advanced decline breadth. In the previous 1 and 2 webinars, last 2 webinars, when the 1-2 days were in much more green color, I mentioned that if the flip-flop continues, we would expect them to turn red. They have at least partially turned red. 1 day period is very bearish now. 2 day period is balanced. If the flip-flop is continuing, I expect the 2 day period also to turn red. 5 day period is now balanced. 10 day, 1 month are bullish. If we go to the longer term periods, then we see bullishness. Near term periods are bearish. Therefore, for swing trading, if we looked for bullish trades on Friday, probably we wouldn't find many. Would we find many bearish trades? Probably no, because the market ETFs, some of them dropped, but dropped by very little percentage. Stocks were in an uptrend, the market ETFs were in an uptrend. It might not be easy to find bearish candidates, however, there were probably some. I shared one possibility during the market hours on Friday that I shared, I think, on my forum. We'll look at it later if I remember. But before that, let's look at the bucket analysis. percentage of stocks above mid Bollinger Band. Taking S&P 1500 stocks as a whole, that came down from 71% on Thursday to 62% on Friday. That was 9% drop. So about 9% stocks crossed below the mid Bollinger Band. That was bearish for Friday. And of course, 100% sectors were down, 78% of industries were down, and 70% of stocks were down on Friday. If we look at the bucket analysis histogram, neither the uppermost bucket nor the lowermost bucket are at extreme levels. Extreme levels would be 30%, 40% like that. But the uppermost bucket is now only at 6.2%, lowermost bucket 2.3%. What are these buckets? The uppermost buckets means stocks that are above upper Bollinger Band. So only 6.2% stocks are above upper Bollinger Band and only 2.3% stocks are below lower Bollinger Band. So it's neither overbought nor oversold in terms of Bollinger Band analysis as a whole on S&P 1500. No extremes. Overall, it is bullish because 62%, more than 50% stocks are above mid Bollinger Band. Again, no sign of weakness or bearishness from sector, industry, stock advance decline as a whole. Friday was weak, but as a whole, there is not much weakness, and neither it is there from bucket analysis. What about technical breadth using Q Finder? First, looking at the weekly interval, the balance between bears and bulls. All signals is balanced. Trend continuation balanced. Strength signals bullish, reversals bearish with comparable magnitudes. So that makes the strength and reversal together bearish. Still, we have to say objectively looking at all signals that the week was balanced, almost perfectly balanced between bulls and bears. Is there any alert from the number of bearish headwinds in the weekly interval? No, it's only 7, very small percentage, nowhere close to even 1%. So there is no alert shown by the weekly headwind signal, that is a reversal signal. What about Friday? Friday is more bearish. We saw that from sector industry stock breadth also. All signals 71% bearish. Strength, reversal, both are bearish. Trend continuation is also bearish. Therefore, Friday we could start to look for bearish trades. Market is going up for a long time. Looking at the sector industry stock breadth as well as technical breadth being bearish, we could start to look for bearish trades. We could find probably some, but maybe not a lot, because the market ETFs are still in an uptrend and none of the market ETFs are giving bearish setup using Q signals. Now let's look at some of the stocks that I shared in recent days, either in YouTube videos or on my forum before knowing the result, as always. One was LMAT. I shared it as a bullish stock. Now you can see it had excellent trendline support in both weekly, daily. Then it went up strongly with bullish flow and a go with flow long trade setup. Since then, price is going up. It almost covered the risk distance, almost, by Friday, depending on where you entered the trade. If you entered the trade using real-time charts in this candle, sometime in the middle of the candle, you have already covered more than the risk distance. If not, it will cover the risk distance by the time the upper boundary is hit. That is the initial profit target for go with flow long trades. The weekly is looking pretty bullish. So I expect the stock to continue to go up. However, I will not buy the stock on Friday because Q traders are active traders. They would like to buy at the swing low using the proper setup. Friday there is no trade setup. We had a go with flow long setup on this day. So this worked well for us. Other stock that I shared, that was airline stock, Hawaiian Airlines. I think in the last webinar I mentioned that, or maybe it was in the forum. I mentioned that it is creating a triple bottom in daily. In weekly, it displayed the bullish headwind, created a false downside breakout with bull release signal in weekly and also in daily. Here is the bull release in daily. You could buy at the close of this day using box long trade setup. However, I didn't share it at that time. I shared it when price came to this area and suggested that if it breaks out, then Q techniques would allow us to buy. However, it did not break out. I remember very clearly in the last webinar I mentioned that Q traders would buy either at the swing low, that would be a box long setup, or they would observe a possible breakout but will not enter the trade unless the breakout happens, and the breakout didn't happen. So following Q guideline, we could observe but we wouldn't take a long trade. On Friday, it displayed a bear release signal. Price came down little bit. We are continuing to watch, at least I am continuing to watch this stock. If it breaks out of the trendline resistance, that may be a breakout buy setup. Especially so if it gaps up at the open, gaps up somewhere above the trendline resistance, that will give a gap up long trade setup as well as a breakout long trade setup at the same time. Now, when I shared the stock, that was somewhere here, the fundamentals were very strong. Industry was also improving. Let's see if that has changed. If that has changed, then we will not like to take the trade only based on technicals. I know there are traders who trade based on technicals only. We could do that, but we have some very powerful tools in terms of fundamental and industry analysis. Why not align more forces in favor of the trend? Let's check whether this industry, airlines industry, is remaining strong or became weak since the last time I discussed the stock. Fundamentals, of course, don't change every day. So the stock's fundamentals are remaining very strong. Undervalued stock with earnings growth and revenue growth. That's a crown jewel in Q terminology and has a short squeeze potential as well. Sometimes I don't mention the earnings date. However, before swing trading, short-term trading, Q guideline is always to check the earnings date. If the earnings date is nearby, we may not want to take a short-term trade just before earnings. For Hawaiian Airlines, next earnings is far away, far enough away for us to consider a swing trade. Fundamentals are strong, but see on Friday, 94% of peer stocks went down. Airlines peer stock. So the industry in itself was very weak. Very weak. 94% is a large percentage. Was it relatively weak relative to other industries? That we can find out from the industry rotation scorecard. Let me look that up. Yes, relatively also the industry was very weak on Friday. the industry rotation color for airlines turned magenta. So on Friday, we wouldn't buy it. What about Monday? On Monday, we are allowed to buy if we see the stock is breaking out and if the industry also turns cyan again on Monday. If the industry doesn't turn cyan, then we don't take a long trade in Hawaiian Airlines even if it breaks out, because we would like to very much align the industry force with a long trade. In any case, going back to Hawaiian Airlines, the Q guideline would suggest watching the stock but not buying it unless it broke out of the trendline resistance. That was a very good idea. So we would continue to watch the stock and we wouldn't take a long trade in a hurry in this congestion area. Another stock that I shared, that was UAA. That was in fact a bearish idea that I shared on this day. That was a bearish flow candle and also it gave a go with flow short trade setup. The candle color when it is magenta on the daily chart, that shows the flow is bearish, and if we get the dot here in the band indicators, the top band is going through setup, not just the flow color, but this dot indicates the setup. So we had a proper go with flow short setup on this day. That was the time I shared it, and since then price has not gone down much. On Friday it tried to go down but recovered, hasn't gone down, hasn't gone up. The trade may be in a small profit. Based on when I shared it, the trade is in a small profit, but it hasn't hit the profit target, and of course it hasn't hit the stop loss also. Logical stop would be above the recent high. Profit target could be at the lower boundary. How is UAS industry? Let's check that out. Even if the industry is weak or strong on Friday, we were not going to take any trade on Friday because on Friday there was no trade setup. The last trade setup was the go flow setup when I shared it, and this stock was fundamentally weak in terms of valuation. One star shorting candidate. On Friday, 63% of peer stocks went down. So in itself the industry was bearish, and if we check out the relative score of the industry, apparel, accessories and luxury goods industry, that is continuing to remain weak. So if we took a short trade using the go flow short setup, anyway we are in the trade, and it's nice to see that the industry is continuing to remain weak in itself as well as relatively speaking. And if we look at the sector, let's look at the sector. Remember when I shared the idea first, the sector consumer discretionary UAS sector was one of the weakest, and we see that the magenta color is continuing. So consumer discretionary is remaining weak. That's good for anybody who took the short trade when I shared the idea. It's continuing to be in the trade. Now there are three long trades that I shared, long ideas. One was Gilead, Gild, and by the way, I am doing this exercise looking back on the ideas that I shared. All the Q traders also have access to the Q diary, and they are expected to fill up the diary with their short-term position and long-term trade, so they can observe what they are doing right and what could need some fine-tuning. In effect, when I shared the ideas on the forum, that acts as a diary for me. I also fill up the diary for stock trades. And I strongly suggest anybody trading, whether using Q systems or not, adopt a diary that helps you fine tune your trades, improve your result. I'm sure using the diary will improve your result because it will tell you what to do better and what to continue doing same as before. Now for Gilead, I suggested the buying on this cyan color candle. It was bullish flow and the band dot indicated it was also a go with flow long trade setup. Since then it has not hit the profit target, it has not hit the stop loss, so we are also in this trade. And after I go through all the trades that I shared recently, I will make a conclusion. That's why I'm going through these past trades more today. WBA, drug retailer, I shared it as a bullish breakout trade on this day when it broke out of the watermark resistance, and you can very clearly see a cup and handle pattern. It broke out and I suggested buying the stock right on this day as a breakout candidate. After that it has gone up, has not hit the profit target, which might be at the trendline resistance, that is above price. Of course it has not hit the stop loss, price didn't go down. So anybody taking the trade based on the breakout analysis is still in the trade. And I think the last trade idea that I shared was on ENBL. ENBL. Let's check that out. When did I share it? On my website sagarnandi.com, I regularly share stock analysis, trade ideas, but not supposed to be trade tips. You may confirm the trades using your own techniques to make sure it suits your style, it suits your risk tolerance, etc. Most of the trades that I share are for swing trading, short-term trading purposes, and they are shared under this category: 360 degrees trading techniques and ideas. 360 degrees because I look at sector industry rotation, fundamental, technical, everything. And of course, I look at the market as I shared in today's webinar also. This was the day when I shared the trade idea. Watch out for a confirmed breakout in this crown jewel in a strong industry. Crown jewel meaning undervalued stock with high earnings growth as well as revenue growth. I shared it 2 days ago. Let's check the exact date and time. September 2nd, 10:43 a.m. So it was in the morning session. All my times are in Eastern Standard Time, New York time. So it was in the morning session. That's why I mentioned that watch out for a confirmed breakout. When I shared it, it was breaking out, but the breakout had to be confirmed by the close of the day. Q guideline allows us to buy at the close. We don't have to wait for the next time. And I shared the snapshots exactly when I looked at it in the morning session. The industry strengthened rapidly. It accelerated as well. So the industry was allowing us to buy. Fundamentals, I mentioned in the subject, it was crown jewel, meaning undervalued with high earnings growth as well as revenue growth. In addition, it had a short squeeze potential. Funds are accumulating. And on that day, 97% of peer stocks went up. The stock itself was up by 2.5% when I shared it. Next earnings, 2nd November, some distance away. And I pointed out it could also be bought as a dividend play. It has a high dividend yield, 8.3%. And the graphs are showing how rapidly the earnings and revenues are accelerating year on year quarterly earnings and revenue, they are sharply accelerating. Fundamentals were very strong. And this is the snapshot that I shared in the morning session. In the daily, it came to the watermark support, created a false downside breakout with a bull release signal, possible box long trade setup, but I didn't share it at that time. I shared it when I saw the breakout. At that time, it was also coming out of Q squeeze, so it was a squeeze release breakout. The weekly had displayed a bull release 1 week ago, at which time it also created a false downside breakout, and the current week candle was very bullish. So this was a breakout setup that I shared 2 days ago, and let's see how the stock is today. It's 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 up little bit. Certainly has not hit the stop, has not hit the profit target also. Now I completed a review of probably all the stocks I shared in last 1 week or so, and what we saw that most of the stocks moved in our intended direction. For Hawaiian Airlines, I suggested waiting for a breakout. The breakout didn't happen. And for the other stocks, most of them moved in our intended direction, more than 60%, certainly. That percentage is important because for short-term trading, if we hit at least 60% success rate, we are almost assured to make quite a good percentage return on an annual basis, trading stocks, not options. They moved in our intended direction for the most part, however, didn't hit the profit target, and none of them hit the stop loss also. So if you took the trades, your account might have gone up little bit, but you couldn't close any of the trades. You were still holding all the trades, and that is showing that though the market ETFs QQQ SPY are making new all-time high, the stocks are not necessarily moving so fast as they used to earlier. Overall, we are still in a small profit if we took all these trades, but they didn't hit the profit target. That is a slow market, and that is what is making trading more cautious now. It's not a time you just buy stock, whether using Q setup or non-Q other techniques, and they are hitting profit target immediately. That is also because of the moving up of the market, but gradual, very gradual, and of course IWM DIA are in a sideways range in this week. That also contributed to the fact that the individual trades didn't hit profit or loss, neither. Now on Friday, we saw that the market was weak, and I always have this tendency to align forces with the market. So on Friday, I was looking for possible bearish trades, and I shared this idea, actually a question: which one of these two go with flow short setups would you take, if any? Now I shared it 1 day ago Friday, and if you check the time, 11:58 a.m. So again in the morning session, we would have to see if the go with flow setups, in this case in the steel stocks, steel industry stocks, US Steel X and ArcelorMittal MT, we had to see if the go with flow setups confirmed by the end of the day. We look at that, but first let me review the analysis as I did using live analysis in the morning session. The steel industry was weakening. You remember, not a long time ago it was one of the best performers, but now it is pretty weak. The score is coming down and the color is magenta, so that allows us to short in the steel industry. I looked at these two stocks fundamentals. They are not weak. Valuation medium, yellow color means medium, neither overvalued nor undervalued. That is true both for MT and X, and both of them have heavy high earnings growth. So they are not weak fundamental. They're in fact 1-star buy candidates. But that is fine. As I mentioned, Q guidelines allow us to short fundamentally strong stocks at the high price level. And both of them were at pendulum high. This is empty. This is as of the time I shared the analysis. Weekly was magenta, daily was magenta with a go with flow setup. In Q global or meta stock, the candle color is flow color, same like trade station QLA, and the ribbon color is trade setup. So it had a possible go with flow short setup in the morning session. Now I asked the question, which one would you short between MT and X? Suppose both of them closed just like when I shared the snapshots. Now keep this chart in mind, MT, and now let's go to X. Also bearish backdrop, bearish flow, and a go with flow short setup. So both of them had a go with flow short setup. I asked the question, which one would you short if any? And the reason was, if I went back to MT, it had a trend line support nearby. Q guideline is never to short a stock where a trend line support is nearby. The trend line was there in daily as well as weekly, and that's why I asked the question. As per guideline, we would not try to short MT even if it closed like when I shared the analysis because of the trend line support. On the other hand, X, US still the trend line support is far away. By the time price came there, much more than the risk distance would be covered. So if price closed just like this, we could take a go with flow short setup. Risk would be narrow. Now let's see how they closed. MT, sorry, not M, MT. By the close of the day, the flow color is not magenta anymore. So that would anyway not allow us to short the stock. And as I mentioned just now, even if it was magenta, we wouldn't short because of the trend line support. That is MT. What about X? How did it close? X didn't have any trend line support nearby, and it actually closed with a magenta color in the daily with a very bearish shape candle, closed almost at the very low of the day. So X gave us a proper go with flow short trade setup. And now if you look back, in fact we had the go with flow short trade setups on this day, and this day. You could short it on any of those dates. Of course, Q traders are active traders, so I would expect them to short at the lowest risk point, which would be the earlier 2 days. And if you look at the weekly, it reversed from the trendline resistance. Incidentally, it displayed the bearish headwinds at the very top, and it was reversing from trendline resistance in weekly, so you could quite confidently short it on any of these magenta candles. In fact, the earlier two go with flow short setups would be better, but if you didn't do that, you could take it on Friday as well. The weekly daily both are looking quite weak. The relative performance is tilting down. We saw fundamentals are not weak, but we are allowed to short fundamentally strong stocks if they are at pendulum high, price extreme high, which is true in this case shown by the band indicator, and if the industry was weak. Let's check the industry out. Let's start from the top, go to the sectors. material sector, it is neither the weakest nor the strongest, in the middle. However, the sector level is too broad to decide whether industry is aligned. We need to look at the actual industry. So let's drill down into materials industries and look at steel. That is here. The industry rotation is allowing us to short. It is weak. Friday closed weekly. Weak industry. It was much stronger earlier, showing some deceleration as well. So the industry remained weak on Friday. That allowed us to short US Steel on Friday. That is how, when I see weak market, I look for short trades, and when I see bullish market, I look for long trades for the most part. That allows us to align the market level force first, and then of course using the 360 degree aligning the industry and fundamental technical, we align the other three dimensions also. In the end, we end up with a trade that has all the four dimensions aligned with the trade. And if we are shorting at the top, like in case of X, we align at least three of the dimensions. We are allowed to ignore fundamentals if we are shorting the top. Though I found this one shorting idea on Friday, I didn't find many easy shorting ideas at the close. And you may be careful with buying ideas also, because two of the four market ETFs are moving sideways. SPY, QQQ are making new all-time highs. That may be because of the mega caps were going up sharply for last couple of days. As I took time to explain the recent trade ideas, they are yielding a small profit but have not hit profit or stop level quickly. That may be a signal to alert us that maybe slow down short-term trading. Wait for the direction to be clearer. Let DIA and IWM be in clear trend either up or down, and then take trades in that direction. Currently, as you can see, I have some long positions, some short positions. The long positions are in very strong fundamental stocks. Short positions are either in weak fundamental stocks, or they are giving trade setup at very high price level in weak industries. I'll not go through more trades today. We are near 1 hour point. Let the market be clearer, and then I will continue to share more ideas on my forum. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. That will most likely be on Wednesday, 8 a.m. Eastern Standard Time, on the same YouTube channel. Thanks a lot once again. Keep safe and trade profitably. As I always say, no reason not to do that. Thank you.